AJ Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to the AJ Brown Show, episode 152. My name is Cyprian Francis, and AJ's feeling better, so we're back this week. AJ, how you doing today?
Hey, I'd say I'm about at 85%. I'm just now able to talk without having it sound like I'm from some sort of porn movie or something like that. How you doing? So I'm good.
That's what we were trying to avoid last week. I mean, you were okay, but you were sounding not live stream podcast ready. So
No,
and
but
took a break. But
we
we've got
definitely have to go back and look at some of the stuff from last week to make it make sense with this week.
Yeah, and so with that, it's the first week of October. Volatility starting
First
to
week
tick
of,
up.
of quarter four.
Quarter four, we're getting some geopolitical news. We've got the election closing in. We're getting some economic news. Where do we want to begin? How are you? What's driving? I mean, I guess unemployment is driving the market today, but let's maybe, get caught up on the last 2 weeks on what you're seeing on your end.
Yeah, sure. Let's go back a week. So if I go back a week to last week, really all I want to focus on is a couple of things. First of all, we'll just touch on this briefly. Our GDP numbers. This was the final numbers for quarter two, right? Remember, they give us an advanced number. A month later, they give us preliminary numbers. And then a month after that, they give us the final numbers that they're going to lock in. And so didn't change. Basically coming in at 3%, which isn't weak. It's actually quite strong for a big economy like the US. So good. We've got a strong economy. Then we've got the all favorite personal income and outlays that was reported last Friday. Now, if we take a look at that, you're going to see as we look through all these numbers that, man, especially this core PCE price index month over month, I mean, this is right within where the Fed wants it to be. 0.2, 0.1, that's where the Fed wants this number to be. And so that means that they have succeeded in getting inflation under control in, compared to history, a very short amount of time, like 18 months. So, okay, great. Now let's go back a notch and let's come back to this week. This week, I mean, I guess the most important thing was today. Let's go ahead and just bring ourselves to today. Today, we got the employment numbers. And what did the employment numbers tell us? Let me go ahead and just filter this economic calendar so that it only shows us the United States stuff. So I'm going to add a little bit of a adder to this URL, and that's going to make it just for the United States. There we go. So we got our employment situation this morning. And people were on pins and needles. What's it going to be? What's it going to be? The Fed has spent the last 18 months aggressively controlling inflation. What are these employment numbers going to be? Well, guess what? Strong as shit, man. Especially compared to last month where they came in sort of weak. I mean, non-farm payrolls, they were expecting 132,000. They got 254,000. Not only that, they went back and looked at those pretty crappy numbers for August and upped them almost, 17,000. You look at the unemployment rate, ticked down again. Last month it ticked down, which was confusing because the unemployment rate ticked down, but so did jobs. Well, the unemployment rate continues to tick down. This is great news, right? Private payrolls up way more than expected. Manufacturing payrolls, we're still losing some manufacturing. Participation rate, I've talked about that in the past. I always look at this number. This talks about how much of the people on the rolls are actually in a job. and 62.7. Good for now. Hasn't been the best as it's always been in the past. After COVID, it kind of dropped down, but I'm okay with that number. And just seeing average hourly earnings being up, seeing the average work week coming down, that means people are getting a little bit of reprieve from all the work that they've been putting in. This is a really rosy employment situation. Combine that with the fact that inflation looks to be under control. I mean, this is the Goldilocks situation. The only thing that could be, one tad better would be if people felt it at home. And if you look, at the numbers and you look at people's personal balance sheets, they should be feeling at home, but emotionally, a lot of people still say that they don't feel good at home. And that might have to a lot to do with, how polarized the country is in this whole political thing, which I don't even want to get into. But I mean, if this this is the soft landing that everybody can dream of, that nobody expected the Fed or the fiscal, group to pull off. The fiscal group is, of course, the politicians. Nobody thought that they could do this, but it looks like it's happening. And if it stays, through the end of this year, Sip, I mean, that is going to be an absolute miracle, and everybody should be celebrating.
Yeah, I feel like the reaction from this, or I don't feel, but the reaction from this was that the expectation for the next cut kind of dropped a little bit, right? It went.
Check this out, Sip. I'm going to zoom in on this one. Forget the even border to my browser. I'm removing this. You got to see this. So this is saying that the next cut, it's at almost the market is pricing it in as we speak. It's like almost unanimous. It's not unanimous, but 9 out of 10 of the folks in the CME survey are saying that it's only going to be a quarter point next time. But I want you to look down here at the fine print. 1 day ago, yesterday, that same number was only 68%. So we jumped up, 22% here to get to this 90.5 in 1 day. And that's because of the employment report. It wasn't so straightforward. In fact, a week ago, this number was under 50%. It was 46.7%. A week ago, it was almost a given that we were going to be seeing, we were going to see a half point again. And now it's a given that it's only going to be a quarter point. And if we fast forward a little bit, I always like to look out through the end of the year. If you look at the December numbers, again, I've got to point out that what they're saying here is that in December, it'll be another quarter point for a total of a half point, a half point coming up and a half point in December. But you look just yesterday and it wasn't that agreed upon, right? The number at 75% now was only at 43. It wasn't even, a consensus. It was more like, we think that, just a week ago, it was almost a given that it would be at least a 1.25 point total, not 1 point total, including, for the whole year, a 1 point drop. That's where we're going now. But just a day ago, a week ago, they were thinking that it would be more aggressive than that. So, the market is starting to respond to that today. The initial excitement around the employment news, that wasn't such a bad thing, but now you're starting to look at the day play out, and it's bouncing. I call it amateur hours, Sip. When we take a look at these morning numbers, the first hour of trading is always, folks right before they go off to work. A lot of retail investors involved. Let me shut off this indicator so that you're just looking at the bare price action. Shut it off. We'll come back to that indicator in a second. It's one of our free indicators. So, it started up, it gapped up high, and then it dropped down low, and now it seems to be working itself back up again for the day. But I think until we get to the afternoon session, mm, I think that there's going to be a lot of ups and downs.
Yeah, I mean Goldilocks soft landing. This is what I continue to keep seeing in some of the, the tweets and the rhetoric coming from some of the experts in the field. And then another stat that caught my attention was the year-to-date return on the market sitting at about 20%. So for us to be in a situation where we're having the lower rates and then the market still kind of holding itself up, I kind of defer back to the premium selling strategies and start to think that it's probably a good time to start to implement, or not start, but there may be, how much more room do we have to the upside through the end of the year, even if things are good. 20% year to date is pretty darn good. So maybe we can use some of these premium to close out the year in our portfolios.
Yeah, it's a little bit undecided right now, and we'll go back and really take a good look at the technicals, but it's a little bit undecided right now. What the heck is going to be happening? Are we going to see a little bit more upward movement? Are we going to be sideways channeling? What the heck is going to happen for the rest, through quarter four? Usually, the holiday season brings out, especially since we've had a muted holiday season last year. We might see, the consumer, the retail, come alive this year, and so we may see some games. There's a lot of question marks in my mind, at least, and I think in a lot of economists' minds. But I do have to point out, here's the VIX. The VIX this week has been pretty high, definitely above that median number that we look at. That's that dotted white line. The VIX is riding high, which again, for premium sellers is a great thing, because this basically means that people are hedging their stock trades with options. So there's big investors out there buying lots and lots of options to protect themselves. That means they're driving option prices higher. So if we put ourselves in the place of selling options, we're going to take advantage of all the demand for options right now. But basically, people are hedging themselves. So even though it's the Goldilocks situation, I think investors, at least in the day-to-day, they're now wondering, well, if we're in the Goldilocks situation, will the Fed drop rates anymore? Because everybody likes to see, at least in the equities market, they like to see rate drops. So this Goldilocks situation gives the Fed a chance to kind of, not be as aggressive dropping rates. So that's number one question. I think that's why we're seeing the ups and downs today in the S&P. I think investors were like, great employment number. Oh shit, this means that the Fed isn't going to drop rates as fast. Oh, that might be okay. And so they're going back and forth with that. And that's what we're seeing in today's bar, trying to recognize that. And I think investors will be thinking about it all weekend, and we might see something happen next week. But there's a lot of uncertainty still, because, we've rarely in history had a Goldilocks situation. And so I think there's a lot of people who are like happy with it, but they might also be protecting themselves because they might have some, doubt. It's not like this Fed doesn't have a credibility problem or anything.
Yeah, I feel like inflation might be the big data set that drives through the end of the year. And another, geopolitical, but event that kind of affected everything this week was the Iran, Israel sending missiles at each other, and oil kind of just like running up. So
Yeah.
do you have any thoughts on oil? I know we don't really look at the futures contract, but it is, it would drive inflation up if there was some more tension and drama with oil heading up, right?
Well, yeah. Um, One good thing is that the oil barrel price hasn't gone up that much, right? We can actually even pull that up a little bit. Let's take a look at the price of oil, just to give people, a lot of people can't look past yesterday, but sometimes it's never a bad idea to take a look at, um, you know, where we've been over the last year. So if I pull up our oil numbers, I'm just pulling it up on the CNBC site, which for me is running a little bit slow today, but let's see what we can pull up.
And I bring it up because it seems as if people are waiting for Israel to respond. And one of the things was, oh, they're going to bomb all the oil fields. I'm like, oh, that can't be good for oil, right? The price
Yeah.
of oil.
Although you have to know that, the US, especially in the last 5 years, has really ramped up their oil production. We are the number one oil producing country in the world right now, which kind of puts OPEC at, OPEC's still out there, but with OPEC and then also with Russia funneling a lot of their oil through China and India, and they're, Russia is accepting whatever those two countries will take because all the rest of the countries in the world haven't. In other words, oil. I'm not worried about what's going on, even if Israel takes out a lot of Iran's oil fields. But for the year, this is the year graph. I think you guys can see that. For the year, oil has been as high as $85, $90. And we've been at lows, and I've seen it at the gas pumps. I was surprised. I mean, I have what I call, you guys are going to laugh, but it's been in my family. We bought it new, and it's a 1989 Chevy Astro van. I call it my hoopty van. And boy, my wife loves it when I take out the hoopty van. And I took out the hoopty van just to, get it going and get the tire, pump up the tires and fill up the gas. And I was surprised at how the gas prices at the pump have come down compared to what they have been all year. And so, yes, gas prices are up back at $75. But if I put my cursor where $75 are, that's nothing compared to what it has been this whole year. So, I never like to hear what's going on in the Middle East. It seems like Israel is taking advantage of the power vacuum here and in this election year here at the United States, and is kind of cleaning house with respect to their adversaries. They started with Hamas and pretty much obliterated this Gaza Strip. And now they're obliterating Hezbollah and Lebanon, pretty much bringing the war all the way to Beirut. And now they're talking about regime change in Iran. I mean, thankfully, it looks like the U.S. markets are kind of keeping that at arm's length right now, but it could easily bleed through if it escalates even more.
Yeah, I mean, when you break it down like this, it doesn't sound as bad as they're making it sound on the news with oil.
Of course, talking heads have to get ratings. And, if you're part of my program, I always say, don't give the talking heads any credibility. Go check the charts.
All right, cool. Well, that's a good little catch up on where we are with the markets. It seems as if on today's Friday, the Bulls and the Bears are digesting this economic news, but that doesn't mean that there's not opportunities on our end. Let's go ahead and pull up your new links page. All right, guys, we've updated AJ's social links page. There's some really good stuff on here. If you're interested in following along, getting a little bit more access to things, you'll see some of the indicators that AJ has on his charts. That's on here. You can show some love on the YouTube channel. Head over there, hit that subscribe button. We're working on the TikTok. AJ's got some really good videos, some ideas that we're going to be pumping out through the end of the year. You got the IG page, you got the Facebook. You've got access to AJ's free daily workshop. So we're going to be doing some premium selling strategies. That's a great, if it's new lingo for you and you want to follow along a little bit better,
that's a good primer.
Yeah, that's a good resource to get that that breakdown. And then we've got AJ's trading program. We've got his coaching program. So thought we would clean this up, add one link for everyone to head on over and grab access to whatever they like. The link to this is in the chat, so head on over there. We are streaming live, so if anyone watching has a ticker or a question, feel free to drop it in the chat, and we'll try and get to it if we have some time, which it looks like we do. Otherwise, we're going to take a short break. We'll be back. Don't really have a topic of the week, so we probably
I want to do some heavy duty technicals on the broad market chart. So let's do that.
There we go. We'll get a layout of what the broad market looks like and where we could position ourselves to make some premium trades. Sit tight, folks. We'll be back in a jiffy. Grab some Joe, get some tickers in mind, and we'll see you in a few seconds.
You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
I'm always surprised with all the different versions of AJ. We've got the clean cut version today. We've got the grizzly, the grizzly guy. We've got the goatee in some of our ad pieces.
You betcha.
Always keeping it fresh with the look, which I hope the fans appreciate. Okay, markets analysis breakdown.
Yeah, I really want folks to kind of pay attention to this. Now, you guys know that I like to identify where are our tops and bottoms, and I measure the heck out of it. It's called retracement analysis. And, you know, I use a moving average crossing. A lot of people use moving average crossings for their trade signals and things like that. It's straightforward. Sip, can I show you an easy way? And I want to show all the people as well, an easy way to really see when a moving average crossing happens. Because when the moving average crossing that I use on my broad market charts is the 3 and 5 day exponential moving average. So I'm going to go ahead and turn that on right here. Let's see if I can pull that up, turn it on. And so when you're looking at moving average crossings, especially on a price chart, sometimes it's really hard to see, you know, did I get a crossing? Did I not get a crossing? So I want to teach you guys really quick how to really make it easy to see. So the trick here is we're going to use something called the moving average convergence divergence indicator and use it to magnify moving average crossings. So I've got one right here. And what you can see is this is how you, if you want to know if you've got a good moving average crossing and you want to be able to see it clearly, you put your 2 moving averages in the fast and the slow length. So when you're configuring your MACD, if you're using the 3 and the 5 like I am, you put the 3 and the 5. If you're using something else like the 50 and the 200, you can put that in there. Whatever 2 moving averages you compare, put that in there. And then for the MACD length, change that to 1. And, you know, if you're using simple moving average crossings, you could throw that in. Exponential moving average crossings, weighted, whatever it be, you can go to town with that, right? So let me show you what that does for us. So instead of having to appear up here on our price chart, you now get this really clear secondary look and a little bit different. See, what you're seeing here is the difference between the 2 moving averages rather than trying to gauge the moving averages where they're both kind of moving and not grounded and you're trying to figure out what the heck. Now you can see it extra clearly, and you can see, especially compared to previous moving average crossings, whether or not it's kind of a big moving average crossing or whether it's kind of a wimpy moving average crossing. You can evaluate it so much easier by separating it out from your price chart and looking at it this way. So I hope you guys all take a good look at it, because we had a moving average crossing on Wednesday. By the end of the day, Wednesday, we had that crossing. But I'm looking at it now, and if we, in the next day or two, jump back across the board here, rather than having a nice solid crossing, I think that we're going to be in trouble. I think that that's too wimpy of a moving average crossing to actually confirm. In other words, I think it'll be a false positive in that we've got higher highs to go to. So I'm watching this very carefully. But assuming that, Wednesday was a good moving average crossing, if we got a good moving average crossing on Wednesday, then on September 30th, that's our highest close to date. That would have been considered our reversal. So if we go with that and we don't, pedal it back because, we don't think that it's legit, and I'm still leaving the door open on that, and I'm going to be watching this MACD indicator I just set up. But if we do stick with that being a top reversal, what's that showing us? It's showing us what you talked about a little bit earlier, Sip, in that if we really did have this good uptrend that was forming, since the beginning of August, we would have actually had our price action kind of go all the way up to this ascending line of resistance. And instead, it stopped about 2/3 of the way. And so that tells me that, the sideways channeling is strong. I was very skeptical when the Fed did its interest rate drop. I was very skeptical of the technicals, at least for that first week. And so I'm kind of seeing this correction, and I'm wondering, were we misled about this uptrend? Are we actually sideways channeling? And I just want to put that doubt into people's minds right now about this uptrend, because I don't want people just jumping into like swing trading and trying to trade this uptrend if it's not for real. And I don't know, and I don't think any technical analysis trader would tell you right now that they knew. If they did, they'd be soon perhaps changing their tune. So I want to be honest with you. It's going to take some time to materialize. So I don't want you jumping in on trades, especially longer duration trades, until the market kind of tells us what it's doing. Let's pull up our last thing here, which is my rulers. So if we did see that top back on September 30th, which was last Friday, and we're on our way down, these different pie slices, thresholds, I should say, we'll be looking at these carefully. So you may want to write down these numbers. So if we get a pullback to this 5,500, let's just say 5,550 to 5,625, I'm just rounding. If we get a pullback to that zone and then start heading back higher, well, I'm thinking that for the rest of the year, we're going to be seeing some more higher highs. Okay. If instead we dip down below that 5,550 number and we somewhere are in this red zone that I identified, I'm still sticking with my neutral bias. I'm going to be going for selling lots and lots of premium for the last quarter this year, making money on sideways chop, whatever I can do there. And I am going to be watching for this lower number, which is 5,300. I'm rounding 5,325. Put that in your notes. Getting below that, and I'm going to be, forget the smooth landing, forget the Goldilocks situation. We're tumbling into a recession. So I'm watching those thresholds, and you guys should be too, for more evidence about what this market's in. And in the meantime, let's trade for shorter durations. Let's not plan out those 1 month, 2 month, even 5 month trades. For this month of October, I think I'm going to be trading, counting on shorter, terminations of those trades.
It's almost as if we want it to pull back to that magenta area if we're optimistic, through the end of the year, in that you want like a healthy market. That would indicate a healthy market, a little bit of a pullback, and then the buyers coming in and pushing us to new highs. But like you mentioned, if we are going to be in this, chop area, premium selling is a great
Just use the right tool.
Yeah. And so, let's go through some examples, because I know that we've got a user ticker, we've got your pick of the week, we've got our speed round. I think the best way to kind of take advantage of this information is to go through specifics one by one. And so
Sure.
with that, let's dig into your pick of the week and see how all this analysis that you've just outlined for us can be applied to a specific name. And so your pick of the week this week is Citigroup, ticker symbol C, a banking institution which theoretically should benefit from rate cuts. Am I right there, or no? Maybe.
Banks, to be honest, when there's high interest rates, banks make money in a very traditional way because they make a difference on the spreads on the interest rates. And when interest rates are low, their spreads get small. So they have to think of other ways, fees and stuff like that. But the truth is Citigroup is one of those too big to fail banks. And, they're at the top of their channel that they established back in July. And I'm looking for an opportunity to do, again, I'm thinking short duration here, folks, like, a month, not more than a month. If it goes more than a month, great, right? But right now I'm just thinking for the month of October, and I'm looking at an opportunity to short some Citigroup. It's been at this top for about 2 coming on 3 weeks. And we keep getting these signals that a top has been found, but we don't get the follow through. We're not getting that follow through on the trading day to say, let's place this trade. So I'm still waiting for that follow through to materialize, but I'm looking to short some Citigroup. Or if I don't want to short some Citigroup, there's an alternative. And Sip, you mind if I demonstrate on our options lookup tool how to quickly find an alternative?
I'll go ahead and throw the link in the chat as well. If anybody wants to get access to, the tool that AJ's awesome team has just released and is updating.
Yeah. So I'm just logging into our members only web portal here. And you can see as I scroll down here, we've got our options lookup tool, accurate data, confident moves, right? So all you have to do to find a good stock replacement, you type in the ticker symbol. You're going to want to look at all the different options, and you're going to want to look at the price components. So when I look for a substitute option for a stock, first of all, I want to go pretty far out in time. I definitely want to go way past how long I think the trade will last. And yes, I know I've been talking about, let's just go for a month, but I for a substitute, I kind of want to go 8 months or more. And so Citigroup's a pretty popular stock. It's going to have a lot of liquidity. So I'm looking at the June 20th, 2025 option, right? And now I want to make money if the underlying symbol goes down. So I'm going to look over here at the put column, and, I checked that box up at the top that said price components. So the price components are going to give me the percentage of extrinsic value. They're going to give me the percentage of intrinsic value, as well as the, actual hard numbers of intrinsic and extrinsic value. But I'm just going to look at this extrinsic value number, because if I want a stock replacement, listen closely, I want to minimize extrinsic value. So basically, I'm going to scroll down my puts. I'm going to find the ones that are in the money. And you'll notice that as I go deeper in the money, that extrinsic value gets less and less. The most ideal options would be under 5% extrinsic value. But I also want to take a look at liquidity, evaluate open interest, evaluate volume, and most importantly, evaluate the bid-ask spread. And although this is, for an option that's going to be a substitute to a stock, this 40-cent bid-ask spread ain't that bad. I kind of am, feeling more love over here on the $75 put. It's got a little bit more extrinsic value component, but the bid-ask spread is 20 cents. There's a little bit more open interest, I'm feeling a little bit more comfortable as that stock replacement with that $75 put. So if I don't want to be shorting the stock, maybe I don't have a margin account. I can't short. And I'd rather just buy something that's going to make money as Citigroup goes down. Here's the put for you, right? A June 2025 $75 put. This is going to be your safest bet. It's going to basically move dollar for dollar. So if the stock goes down $1, this put is going to increase in value by $1. It's going to be linked almost dollar for dollar, just going in the opposite direction. So if you buy this put and the stock goes down $2, your put will go up $2, but it's at a fraction of the price. Citigroup is trading at like $60. This is where leverage and options goes on. Citigroup, if we scroll back to the top, it's trading at $61, right? But this thing is only $14.80. So you're going to get the power of owning something that costs $61 for only $14.80, basically a fourth of the price, and it's going to still move. So, you know, we want to make sure we wait for that signal on Citigroup, and then we want to go ahead and play it on the way down. And then I'm not as concerned, again, only aiming for like a month trade. I'm not as concerned at bottoming out before I actually sell my put premium and buy a protective call, basically put that whole strategy in place. Instead, I just want to get some delta. I want to feel comfortable about, and I don't mean options delta, I mean difference between where I start the strategy and then finish the strategy, you know, do the other leg. I just want to get some distance between that price. And if I'm down here below the center channel, it's not as important to me to actually get it to bottom out because I'm not thinking of the longevity of this trade. I just want to get high rewards at low risk. And that's what I can do by doing this. And the only other thought I could think of is if this is all too expensive for you, even that $14 price tag, you could also think about, you know, especially when we get that signal, putting a vertical spread on the top of this, a bear vertical spread, and just know that size that accordingly because vertical spreads can quickly go from a profiting position to a complete loss. So size that appropriately. Don't use too much of your portfolio into vertical spreads. And if you're part of my program, you know exactly how to calculate the risk and how to go and determine position sizing. Do that.
Well, I certainly like when you bring up some shorting opportunities, just because I look at that market top and I'm like, you know, hey, if we pull back, I want to make some money on the way down, and so I like the layout here. That's AJ's pick of the week, Citigroup. All right, well, we've got some interesting names for the speed round, and we've got a user question. Let's dig into the user question first.
Sure.
AJ. Thoughts on Devon Energy, ticker symbol DVN?
Yes. Devon Energy's been on our trading trainer watch list for a while now. Let's go ahead and zoom out. I'm going to zoom all the way out to a year. So Devon Energy's had some ups and downs. Devon Energy, if we go even further out, I'm going to go to 10 years. And in order to see 10 years, I'm going to switch this this chart to being a monthly chart. So instead of our usual where each one of these bars represents a day, I'm going to make it a month. And I'm also going to turn off a couple of my indicators here so that I can clean up. I'm going to turn off the indicator that I use in order to analyze broad markets because now I'm analyzing an individual symbol. And I'll turn off that MACD kind of cheater moving average crossing viewer, if you will. So when I look at the last 10 years, what I surmise is that for a while there, Devon Energy was in this channel between about, 35 and 50, 30 and 50. Then it dipped down for a while, all the way down. It almost, was at the $10 zone. And then it shot up. And it went all the way up to $80. That was over the period of 2021 till 2022. That, I almost expect that that's a lot having to do with folks working from home and things like that. I'm not sure, but, the energy companies really were making some good profits during that. And now it's sort of moderating. And it looks like it's moderating maybe between 40 and 50. This month it's up. So now that we get kind of that bigger picture of where Devon Energy has been, let's now look closer in, like at the 6-month chart. And so we can see that definite bottom forming here. And so, it might be a little soon to be thinking long duration premium selling trade. But again, my theme for the day is let's keep these premium trades to the short duration for at least the month of October till we can see what the market materializes and matures into. So I see a bottom, and I think you do too. I see that we've got a clear bottom, and we had clear follow through yesterday. So, if you bought shares of Devon Energy or you bought a substitute call option, I don't think that's a bad idea. In fact, let's do that same thing that we did over here with Citigroup. Let's go ahead and put in DVN and look at what some good substitute options might be. And this will also tell us if Devon has some good liquidity. So remember, I want to go pretty far out in time. Let's see. They have a June option. So if I was doing this, I'd probably pick a June option, at the earliest an April option. And I'm thinking the call side now. And again, I'm just going to use that price component. And, I'm seeing the $27.50. I'm seeing the $30. I'm seeing those two strike prices in the June option. And I would say those are some pretty exciting options. I see liquidity. I see open interest. I see small bid-ask spreads. So, I could see you purchasing some of these call options. Again, I'm talking about the June 2025 $30 or $27.50 expirations, and you'd get a great stock replacement. And whether this thing is on a reversal up or whether you're going to be, seeing a short, a stop soon, if it stops up here at $46, sell some call premium, buy your protective put, turn it into a premium trade. If it continues to soar up above $46, great. Let it ride. Put on a trailing stop. Make it a directional trade. And, if it starts to pull back a little bit, you put in a nice, healthy stop loss so that you can protect your trade. Do your position sizing right. But I think you might be onto something here. So, yeah, that's what my thoughts are. And of course, go review the soft data, go review, whatever news headlines are happening on Devon Energy, but looks like it's bottoming pretty clearly here.
Yeah, that's what I was thinking as you were going through that. Is I would want to see where some of the fundamentals lie, because it is quite a decent pullback with some strong support forming there. So there may be a larger story at stake.
Just owning the stock and maybe even owning the call option, you'd have to look to see how dividends, but that's a pretty healthy dividend,
Yeah.
So that would be a reason why you might want to just buy some stock just to own it for the long duration, because this company ain't going anywhere. Look at those earnings, look at those dividends. This is a strong company.
So that was actually, let me see here. That was Mike. Thank you for that, Mike. We've got three other names from the speed round, a few names that we like to review on the show. Let's go ahead and start with Chris in Bozeman, Montana, is interested in Wayfair.
Chris. I knew it. Chris comes on periodically looking for that guy. Wayfair. All right, Chris. Yeah, I don't know where you're at, buddy. Did you take advantage of the last bottom? If you did, now's the opportunity to be, although we haven't gotten follow through, but now's the opportunity to sell your call premium and buy protective puts. You'd pick your $40 strike price. Remember, when we sell premium, we're selling near term at the money options. And, and if you're not sure what the, your at the money option is wherever you're trading at right that minute. So we're trading at $54. So if there's a $55 strike price option, that's the one you typically want to sell, and you want it to be, expiring in the next 3 to 5 weeks, ideally, right? And then your protective option, your put that you're going to buy, is going to be down at the strike price where your break-even price is, probably around $40. And you're going to also want to have that one be 3 to 6 months. In fact, if you can, error towards that 6 months expiration. So if that's where you're at, it looks like, you get yourself a follow-through signal. That's the type of trade you want to put on. If you're just starting out, Chris, then this might be an opportunity for you to short some Wayfair, play the other side of the trade, or like we said, buy that protective option. I'm going to do it one more time. You guys are going to get sick of me using this tool, but this tool is so useful. I'm going to put Wayfair in there, click submit. There it is. Took a second. A lot of data. June, I like that. We'll come over here to the put side. We're looking at that column. I'm right here around the $90 strike price. I'm looking for liquidity. I'm kind of worried about the open interest number here. I'm not so worried about the bid-ask spread. So I could see still doing this, but I could also see even stretching all the way to the 80 strike price. I could see that one working for you as well. And you've got a little bit in there. Any of these 80, 85, 90 would be a good substitute to shorting the stock if you're not into shorting the stock. But yeah, Chris, and depending on your portfolio and how it is, distributed among different positions, heck, I could see playing both sides of this trade, with two separate positions, the call side and the put side. So you might be onto something there. Again, I'm going to emphasize, and I'm looking at the time because I'm going to emphasize looking for follow through, right? And follow through for you guys that are end of day traders like I am. You look at after the market's closed, usually in the evening. You look for your signals, right? And then if you find the signals, you're typically going to trade it the next day. And you just want the next day to kind of corroborate what your signal said the night before. And ideally, you want it to be easy to evaluate because you like, if you're like me, you either offload it, you give it to your nephew or whatever, niece, your whoever. You're going to have them do the trading for you so that you can do something else during the day, whether you've got a profession or a career, or you just want your time to yourself, or you're going to get kind of elegant and you're going to, learn how to program bots, but it's got to be easy. So, a lot of the times what we talk about is just making sure that price is before, on the correct side of the confirming day low, the correct side of the previous day close. I know I said low, I meant close. Correct side of maybe the open range. But another thing you might want to do, and I've got these indicators up for you, Chris. I like to look at accumulation distribution. I'm going to turn it on when I'm evaluating follow through, and this is easy enough to program into bots as well. The on balance volume and the RSI. These are, intraday indicators. And all you want to do is make sure that wherever it is, it's on the correct side of the previous day close. So we're talking about the live tail. And so in this case, we're talking about looking for a top. So the correct side would be below. So in addition to making sure, price is lower than the previous day close, lower than the confirming day close, low range, not just looking at price, let's also make sure accumulation distribution is lower than yesterday's close, on balance volume is lower than yesterday's close, and RSI. Those three, different perspectives. I call them my three horsemen, and they always protect me on follow through days to make sure that this is the day to follow through on that end of day signal. So I haven't seen a follow through day yet to the end of day signal we got on October 1st. I also haven't seen that end of day signal has been reversed on us. So it means that every day we just program our bot to look for those conditions. And if the bot finds those conditions, to go ahead and place that short trade on the stock or that long trade on the substitute put. But yeah, that's where I'm at. And I just want to emphasize, follow through should be straightforward and easy, but it should also take advantage. And those 3 horsemen are fantastic on follow through days.
Yeah, and with the Q4 holiday season, I feel like Wayfair may be one of those companies that benefits from the holiday shopping season.
Yeah, so you got to see your signals. Don't shoot until you see the whites of their eyes, right?
I do think we have time for one more, maybe quick run.
Who said that, by the way? Don't shoot until they see the whites of the eyes. If somebody knows, put it in the chat. I think it was like the Alamo or something.
Before my day, so
before my day too. Dude.
We'll need the AI or the
I'm not that old
to help us answer that. All right, one quick one before we close the show out. AJ, Tito from El Paso, Texas, wants to know about Ford. I feel like that's one we followed for quite some time over the past few years. A nicely priced stock. What are you seeing on Ford?
Consolidation. Straightforward consolidation. Don't trade this for premium, Tito. This is the opposite of what a premium trade should be. This is consolidation, right? If I take my magic marker out, you can see it pretty straightforward here. The resistance is, dropping low here. Support is dropping high here. This is consolidating. So what you want to trade here is breakout strategies, right? Whether you're trading it based on, the timing of the breakout. I like to look for, velocity and acceleration and price action, getting outside of these consolidation zones, making sure it's nice and smooth and not jumpy. And that's a signal that the breakout's happening. Or you could use an option strategy. You could use a straddle or a strangle. Try to put the straddle and strangle so that it, meets the consolidation point. You want the bottom of that straddle and strangle to be right where it's consolidating. It looks like it's consolidating around $10.50. So $10.50. We'll try to get, you might do a straddle at $10. Or you could do, I don't know what the strike prices are right now. But, and we're talking about strategies I don't usually do unless it's with fun money, because they're kind of, they're outside of my wheelhouse. I play around with them, and I used to trade them quite aggressively 15 years ago, but they take a lot of time and there's a lot of losers. So, that's what Ford's showing me right now. I'd go with a breakout strategy, but hold off on selling premium on Ford. That's not the pattern you're looking for.
Yeah, and some of these examples are better than other. We did get a response to your quote, if you're curious about that answer.
Yeah.
Revolutionary War quote
by
Prescott.
Oh, why did I think it was the Alamo? I don't know. Okay, great. Prescott, Revolutionary War. Thanks.
All right. Well, we've got, that's a pretty full show. We're 2 weeks of catching up. Seems as if the consensus is we want to shorten the duration of our trades, potentially look for some chop over the next week or two.
Always.
To see if we can, find that bottom. And then keeping an eye on this inflation, employment news, and we'll start to get earnings soon too, will we not?
Yeah.
Now that we're in
earnings
Q4?
Season's about what, 2 or 3 weeks out?
Yeah. All right, lots of good stuff. Let me throw the links page real quick as well. We do appreciate everybody tuning in. Show some love. Hit that like, hit that follow, hit that subscribe button. Get access to AJ's free indicator suite. Go check out the webinar if you're interested in some coaching, if you're interested in joining the program. All the information is here. It's in the chat. If you have questions about any of the stuff, hit us in the DM. Send us or send the support team a message. Head on over to the site, tradingtrainer.com. And yeah, keep the the train rolling, the premium selling, the option selling strategies rolling into Q4. AJ, any final words on your end?
No, you know what? I'm excited about this Q4. I'm excited about options expiration on the third Friday of October. I'm getting all my trades lined up. So I can't wait to see you guys next week and see what we got in the, see if the market matures and materializes out a little bit more by next Friday.
I completely agree with that. All right, everyone. Thank you for tuning in. AJ, thank you for a lovely session today. I hope everyone has a good weekend. We'll catch you guys next week.
Take care, everybody.
For tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get